So good morning, everyone. Welcome back to our weekly webinar series. Today, we are discussing the proposed changes in the regulatory framework for IPEs. And we're also going to discuss the Rainbow Paper review judgment from the Supreme Court of India. And over to Anil.
Thank you, Ankit. Welcome to 82nd episode of AAA weekly webinar series. So the last episode, that is 81st episode, we tried to complete both the discussion papers, but it was not possible. Today, we are discussing the discussion paper on IPEs acting as IPs. In fact, that was much needed. So most of the IPEs which have registered as IP, and they were not, in fact, they were apprehensive of taking assignments in the name of the IPE, all those clarifications have now come. Although based on the feedback which IBBI keeps taking, I think this is a wonderful thing IBBI is doing, that they take very, very regular feedback, and wherever they find difficulties, that they are trying to iron out. Also, on 31st October 2023, the review petitions filed before Honorable Supreme Court in the case of Rainbow Paper Limited has been decided. In fact, all the 5 review petitions have been dismissed. So we are also going to discuss the impact of Rainbow Paper Limited now. What are the obligations on the RPs and the liquidators? What will happen to the existing cases? So therefore, Ankit, this is going to be a very, very important session. Also, I think some practical experience that we would like to add into the IPE and acting as IP. So just sharing my screen. So this is the subject today, and see, although my PPT is having the first 18 slides on the Supreme Court judgment, however, we would prefer to go directly to the IPE acting as IP in various cases. So this is a discussion paper released by IBBI on 20th October, and I believe we also would need suggestions from our audience, what kind of suggestions we should give to IBBI. So we would be actually giving suggestions on behalf of all of our audience, and Ankit will take the lead to give your feedback to IBBI officially. So that is what is the objective of this discussion. Now, as the discussion paper says, that the objective is that they want to improve the efficiency and effectiveness of IPEs, and also to respond to the emerging needs. Also to have a proper monitoring system for IPEs acting as IP, to strengthen the process, and also the IPE to continue as providing support services, and also as IP, and the dual role, that is, which is very, very important, that IPEs will be having dual role. Clarities are required, and therefore some kind of rationalization was also required. So there are 4 basic amendments. One is the monitoring of the IPE acting as an IP. Secondly, the related party definition for an IPE acting as an IP. Then restriction of the number of assignments by an IP. Minimum fee structure of an IPE acting as IP. These are the 4 things which are covered under the discussion paper. The discussion paper further elaborates that section 217 to section 220 of chapter 6 of the code provides for the provisions for inspection and investigations against the insolvency professional. That means that is applicable to IPEs also acting as IP. So section 217 and 220 is also applicable to IPEs when they are acting as IP. So therefore, the clarification was required that if an IPE is acting as an IP, then how the inspection and investigation and also the show cause notices would be issued, and how the IPE would be reprimanded in case of any kind of non-compliances. So these are the regulations which are provided in insolvency professional regulations, like Regulation 13.3. It talks about that the IPE shall be jointly or severally liable for all acts or omissions of its partners or directors as IPs committed during such partnership or directorship. So this particular regulation was in fact, it was being discussed in professional circles that because of this Regulation 13, Sub-Regulation 3, the most of the IPEs are not taking assignments in the name of IPE, because they are apprehensive that in case of any show cause notice, the AFA for the IPE would be discontinued. Also, in terms of the Regulation 14 of the Insolvency Professional Regulations, the board may de-recognize an IPE by a recent order if sufficient cause exists for its de-recognition. So Regulation 13, Sub-Regulation 3 and Regulation 14 clubbed with Section 217 and 220 of the code, it was a basically hindrance in accepting the work in the name of IPE, because there was no clarity that if an authorized partner is non-compliant, then how the impact will come to IPE. So that was the issue which was in fact burning. So the IBBI in fact tried to gather the rationale why this kind of amendment is required. So the IBBI in fact also saw the Chartered Accountants Act 1949 and found that there are provisions where the members are reprimanded, disciplinary actions are taken against the members for kind of removing their name or imposing penalty or like. So all these were basically in case they are found guilty, some kind of reprimandation and some kind of action is proposed. However, no action is taken against a partnership firm or against a limited liability partnership where all the members are partner and they are doing business together. So there is a precedence that the member of the Institute of Chartered Accountants who is conducting the audit would be responsible and not the firm. So the IBBI tried to even gather information about this, the Company Secretaries Act 1980, and similar provisions are in fact found in the Companies Secretaries Act. Then also the Advocates, the Advocate Act 1961, also the State Bar Council through its disciplinary committee is empowered to take action against advocates, but they couldn't find any kind of action against a law firm. Similarly, in the case of registered valuers, the action is being taken against registered valuers and not against the registered valuer entities. So therefore, even in the accounting and auditing professionals, when we talk about the National Financial Reporting Authority, NAFRA, again, the similar actions are found for the members, but then the firms are more or less not directly involved into the disciplinary action or any kind of reprimand action. So the feedback that was received to IBBI, that was also the company law is also kind of doing the similar things, and also the Chartered Accountant Company Secretary. So they should actually provide a kind of clarification how will happen when the IPE is doing a dual role. One role is to provide support services to insolvency professionals and also to partners. Second role is to act as IPE, and one of the partner or director of the IPE would be authorized signatory for handling that case. Also, it is written that the IPE is jointly or severally liable for all acts. So and then there are also apprehensions that in case we make IPE completely free from any action, then there may be repeated instances of non-compliances, repeated instances of disciplinary action against the partners or directors of the IPE. So that is also required to be covered. So therefore, now the proposal that the IBBI has given in this discussion paper, and accordingly draft amendments have also been given. So what the proposal is that in case contravention by the IPE acting as IP, the disciplinary proceedings be initiated against the IP who is or has been its authorized signatory for that respective assignment. So the disciplinary action will be taken against the authorized partner. Now, in case the disciplinary action is started against that IP, the IPE shall not allow him or her to act as authorized signatory in any other new assignment. Just like an individual, in case any DC action is started, the individual will not be able to get any new assignment because the AFA will get suspended. Then such action would not impact the ongoing assignments or status of AFA of the IPE acting as IPE. So in case partner or directors of the IPE are undergoing an SCN, show cause notice, or a disciplinary action, then the other partners are not impacted, and even the IPE also would not be impacted. However, as I said, if there are repeated instances of SCN, repeated instances of non-compliances, disciplinary proceedings against one or more partners, then the IBBI can also think starting disciplinary proceedings against the IPE also. However, when the disciplinary action against the IPE would start, then the AFA of the IPs, AFA of the partners, AFA of the directors who are associated with the IPE would not be impacted. So very clear, only the authorized partner is responsible. IPE is overall responsible for maintaining discipline, compliances, and should also advocacy about the ethical practice. In case any IPE is known as doing unethical practice, most of the non-compliances, the partners are regularly being reprimanded, the regular SCNs are being issued against the partners, then the IPE also can go into a show cause notice, and the IPE also can lose its AFA. However, that will not impact the partners. So this is the proposal, and in this particular scenario, I believe this clarity was needed. And now the IPs would be safe. Taking assignments in the name of IPE would be, in fact, a very, very good proposition. The minimum fee also is not applicable on IPE. The related party concept is also restricted on IPE. So taking assignments in the name of IPE, in fact, would be now much more advantageous rather than taking assignments in the name of individuals. So coming to the second issue in this regard, Ankit, now the related party definition for an IPE acting as an IPE has also changed. Presently, Clause 23B of the Code of Conduct prohibits the IP from engaging or appointing any of its relative or related party for in connection with any work relating to an assignment. Now, when we talk about the IPE, and we are also talking about the institutional framework of IPE, then the public and the IBBI is expected, they were expecting that most of the services will be collated together, so that the insolvency professional is not supposed to go out for process consultant, not supposed to go out for various legal support, and also not supposed to go out for claim verification, also is not supposed to go out for various kind of accounting services. So various professionals with particular IP is engaging as of now. That actually would be done within the IPE. Maybe that the IPE has an associate concern of chartered accountancy, and that chartered accountancy can maintain the books of account. However, there are two restrictions. One restriction is that the valuers have to be independent. Valuation has to be conducted by a party who is not a related party to IPE and also not a related party to any of the partners of IPE. Second is the auditing. May it be forensic audit, transactional audit, internal audit, or even statutory audit. When the word is written audit, it means all the four audits cannot be conducted by any associate concerns of the IPE. What can be conducted by the associates of the IPE? Taking control and custody, legal work, accounting work, filing of income tax returns, filing of GST returns, filing of TDS returns, filing of ROC returns. All this can be handled within the IPE, and it will be purely depending upon the committee of creditors and the IPE how the fees would be taken. IPE can choose to take additional fee if approved by the committee of creditors, or IPE can give a kind of consolidated fee code, excluding the valuation services and auditing services. My understanding is that the auditing includes internal audit, statutory audit, transactional audit, forensic audit. So this amendment will actually be able to facilitate consolidated fee code only excluding valuation and auditing, where the independence is required, where every like third party review and is required. So Ankit, this amendment, now they are coming with the amendment, and the proposal is that the related party definition under the clauses of 23B, 23C of the IP regulations, that would be proposed a change, and the related party definition will be as per section 524 capital A, subsection 24 capital A. That will be the definition of related party. However, in that definition there will be an exclusion, and that inclusion would be an insolvency professional entity of which individual insolvency professional is a partner or director. That means IPE can do some work. IPE can do accounting work. IPE can do legal work. IPE can do the process consultancy work. IPE can do 29A verification work. IPE can do claim verification work. Further, a partner or director of the IPE registered as an insolvency professional for the services other than related to valuation and auditing. First of all, why the clause A? In the clause A, the valuation and auditing is not there because for IPE, there is a special structure proposed in the regulations. Therefore, the IPE cannot be a valuer, IPE cannot be an auditor. However, in clause B, when the related party is linked to the partner or director of the IPE, so therefore, in case a partner has a law firm, that can be engaged. If a partner has an accounting firm, that can be engaged. If a partner has a compliance firm, that can be engaged. If a partner has a firm which is providing support services like process claim verification, process consultation, or even the commission agent who actually has an infrastructure of finding customers for the liquidation asset in case it is approved by the committee of creditors. So there, the related party concept would not be applicable, and it is applicable only and only in case of valuation and auditing. So Ankit, these are the two things that we have discussed so far. In case if there is any question, or in case you want to add your comments, please.
So I think the idea is, of course, for larger cases, it is also important that within an entity, multiple partners are working on that matter, and it is possible that some of the partners might be, working in a management capacity. So this is my understanding that this will also be a path-breaking thought, that if an IPE gets an assignment and let's say an authorized signatory, one of the partners of the IPE or one of the directors of the IPE is working as the authorized signatory, the other partner who has speciality in that sector can actually take up maybe a management role to run that going concern enterprise. So even that gets permitted here. Of course, professional services like accounting, recording the books of accounts, like legal services, as you mentioned, is anyways something that now should be permitted if this goes through and becomes a regulation. But more or so for larger entities, managing those entities in this manner would now be possible.
So can you see if there is a question related to this part? You are not audible, Ankit.
So no, the questions are majorly with respect to the rainbow paper judgment. We will take them up when we come to that.
Yeah, certainly. Okay, so going to the third issue, which is the restriction on the number of assignments of an IP. So presently, clause 22 of the Code of Conduct, which is part of the insolvency professional regulations issued by IBBI, actually says there is a restriction of 10 assignments on an insolvency professional, and out of those 10 assignments, not more than 3 assignments should have an admitted claim exceeding 1,000 crores. That means 3 assignments having 1,000 crores of claims or above, and rest of the 7 assignments would be smaller assignments where the claims admitted are less than 1,000 crores. So that is the entitlement of an insolvency professional for 10 assignments. Now, the feedback which is given to the IBBI is that the IPE is a larger organization. IPE will actually have a lot of strength of employees, like we have CIRP team, liquidation team, asset sale team, claim verification team, accounting team, compliance team. So we have all these teams, and however, if the number of assignments are restricted to 10, and that too, out of the 10, only 3 can be more than 1,000 crore, that probably would not make the IPE as a viable entity who can afford full-fledged infrastructure in-house. Therefore, the amendment which is proposed is like the IPE should have a larger capacity, larger entitlement of the assignments. Now, the amendment which is proposed in such cases that the clause 22 of the Code of Conduct, which is there as a part of the insolvency professional regulation, is now it's saying that the first is the insolvency professional acting as an individual. Again, the same limit of 10 assignments where not more than 3 would be more than 1,000 crores of admitted claims. Now, in case the IPE is acting as an IPE acting as an IP, there will be an overall limit of 5 assignments per partner who has been appointed as authorized signatory. So the condition is that the 5 assignments per partner or director who are IPs holding AFA at any point of time, excluding the assignments taken by an IP in his individual capacity. So that means there is a possibility now the 10 assignments can be taken by the IP in his own name, and he can still do 5 assignments where he is authorized signatory in an assignment which is in the name of the IPE. So in total, he can do 15 assignments. Out of the 15 assignments, there would be 3 assignments in his individual name where the claims would be more than 1,000 crore, and the rest 7 assignments will be claims, admitted claims less than 1,000 crore. However, the 5 assignments that a partner can take from the IPE, that can be even more or less, that there is no condition regarding the amount of claims admitted. So like in that case, there is another condition on IPE. An IPE shall not have more than 15 assignments having admitted claims exceeding 1,000 crore. Now then, that means that there is no higher limit on IPE. IPE, there is only limit of 15 larger cases, but there is no limit on smaller cases. Any IPE can have 15 assignments where the admitted claims are more than 1,000 crores, and also can have something like 85 assignments where the claims are less than 1,000 crores. So there is no limit on the other side. On the second side, there is a limit only on the larger cases. So what we can conclude is that the IPE can take up cases without any limit if the claims are less than 1,000 crore. If the claims are more than 1,000 crore, these kind of assignments are restricted to 15. For an insolvency professional, 10 assignments he can take in his own name, and over and above that, 5 assignments he can take as authorized signatory of an IPE. So this is what is the Ankit proposed amendment. So I believe any kind of
this kind this kind of removes the hurdle of 10 for the IPE, because before this amendment, as of now, the reading is that the 10 limit is also applicable to the IPE as a whole. So this will definitely increase the limit for larger IPEs, and they can take more cases in the IPE's name. So it's basically maybe a good step. And 5 per partner is also a decent limit, because there is a limitation to how much time one would be able to spend on each case. However, the time to be spent on every case depends on the stage at which the case is there. So that's always there. But then, yeah, this is a good development.
Coming to the fourth proposal, which is the issue number 4 regarding the minimum fee structure of an IPE registered as an IP. The regulation 34B was inserted in the CIRP regulations, where the minimum fee was stipulated, and it was stipulated that the minimum fee means that the fee cannot go below that, and also it was coupled with the voluntary incentives which the COC would approve for the insolvency professional. And in case that incentive scheme is not approved, then there is no entitlement to take the incentive. So the feedback which was given to IBBI, that was taken by IBBI, was that when the IPE structure, when the institutionalization of the IPE was proposed, it was kind of proposed that all inclusive services can be offered, and that will save time, and that will also save the process of appointing and engaging professionals. And that actually takes a lot of time, and the committee of creditors are required to give approval for various professionals. So that is now kind of said that the minimum fee in the entire regulation 34B is not applicable to IPE, and the total fee or incentive, what are the inclusions, what are exclusions, that also has to be mutually decided by the IPE and the committee of creditors. So I think it can be even analyzed, it can be even interpreted as that the IPE can even offer minimum fee less than minimum fee quoted, because the entire regulation 34B is not applicable to IPE. So now IPE can quote a fee which is less than the minimum fee, because the entire regulation is not applicable to IPE acting as an IP. Is that a good interpretation, Ankit? That this entire section is not applicable on IPE acting as IP.
Yeah, so IPE will be open to negotiate the fee, and they can have a lesser fee. They can have anyways, they could have a higher fee earlier, but now they can have a lesser fee than the minimum fee. And that's the big change, where IPEs can now offer lower fee than the individual IPs.
Okay, before we go to this, do we have questions on some questions, Ankit, or anyone would like to give a suggestion? What should be the recommendations? What should be the recommendations to IBBI against all these 4 issues?
So Ravi ji has a comment. He says that the overall number of cases is going down, and if IPEs and their partners take all the cases with these increased limits, the cases remaining with individual IPs will be very little. So individual IPs have a limit of 10. IPs who are part of an IP have a limit of 5. So the limitation would, or the change in limitation would not be maybe an incentive for IPs or IPEs to get more
I
cases.
think what his question is, he's saying that in case the capacity for IPE is increased, then IPEs will be taking more cases, so there will be hardly anything left for the individual IPs. This is what he's trying to say. I believe the experience of the creditors, it has happened because of the feedback from the creditors. The creditors' experiences that the IPEs are more reliant and they have more capacity, they have more human resources, therefore they are being preferred. So it is not about the IPE or IP, it is about the infrastructure any insolvency professional is able to keep. If there are many individual insolvency professionals, they have generated huge infrastructure for their cases and they are doing very successfully. So that also is one fact, because as the fee has gone down, the viability is only in the number of cases. When the fee was very high, even one or two cases were viable. But now the fee is actually going very down. So therefore, only those organizations would survive where the number of business, the volume of business is higher, because the fee is now very low. Any other question, Ankit?
So the idea is that this limitation, then the question is, would only be based on the designated partners in the entity, right? The other partners or the other IPs who might have, a collaboration with any IPE to seek support services would not be part of this limit. That's what my understanding is, that this 5 per partner will only be for the designated partners or
Yes,
the
it will be only for the
directors.
designated partners. It is not for any other kind of associations with the insolvency professionals. The authorized signatory can only be a partner or a director of the IPE.
One of the recommendations is from Mr. Kashyap. He says that limitation of assignment for IP should exclude voluntary liquidation assignments. That's what he's saying. That's his view. So voluntary liquidation.
I believe when we talk about these assignments, these are not including liquidation cases. These are only the CIRP cases. So the voluntary liquidation in any case is not included. Let us read the section 23.
Understanding to be developed that whether does this include liquidation cases?
Okay, I think I can go to this. Let us see the regulation 22. This is a code. An insolvency professional must refrain from accepting too many assignments if he's unlikely to be able to devote adequate time to each of his assignment. An insolvency professional may at any point of time not have more than 10 assignments as RP in CIRP, of which not more than, because if the liquidation is a liquidator assignment, liquidation assignments are not
very clear. It is very clear in the clarification that the limitation of 10 is only applicable to CIRP cases. Very clear.
Very clear. So that is the reason that
voluntary liquidation was anyways not part of this limit.
It was not part of this earlier also.
The first part of this rule, which says that he should not be having too many assignments that he is not able to devote time. That's a different. That's applicable to everything.
Yeah.
The clarification is only with respect to the 10 limit is only with respect to CIRP cases.
Yes, yes.
As long as a person has infrastructure to handle, say, 20 voluntary liquidation assignments, he's free to do that.
He's free to do that. Even today, I am also doing more than 10 liquidation assignments, because the liquidation assignment is something which never ends up. Because see, the COFE transaction and the other litigations will continue. And like there are about 8 assignments with me where I have not taken any fee for the last 4 or 5 years. However, I'm doing all the progress reports and I'm appearing in all the litigations. So this is the agony of a liquidation assignment, because see, you recover your assets and you distribute, and then whatever fee is payable to you, you get that fee. And after that, you have to work for about next 10 years.
Yeah, I agree. So Mr. Kabir has a point of view. He says that with the IPEs being allowed to give lesser fee, there is a possibility for IPEs to offer lesser fee and therefore grab more cases from the CRP, the more CRP cases. I believe that is possible if there is, because there is good competition between IPEs, and somebody can definitely offer lesser fee than the minimum fee if this regulation comes out. Even as an IPE, somebody can do that.
But for the time being, the banks have not empaneled, other than PNB. I believe no other bank have empaneled IPEs.
Now every banker will, if they understand that they can reduce the RP fee from the minimum fee doing this, maybe they will also push for that. Then yes, other questions with respect to this issue is so IP can act both. So there is no, so but there's a comment that the IP should, so in an RV, what happens in an RV is that the RV cannot practice as an individual once he's part of the RV. But that concept has not been brought in the IPE concept. So the IP can have individual cases in his own name. IP can be part of an IPE also. So
Yes.
that's something that's still a major difference between the RVE framework and the IPE framework. So that's something that is a comment here. And yes, I think we can continue. We can continue.
Okay, now coming to the Supreme Court of India review petitions, which actually these review petitions were dismissed on 31st of October 2023. There are in fact, there were 5 review petitions filed. One was filed by Sanjay Kumar Agarwal. The Sanjay Kumar Agarwal was not an original party to the proceedings. However, he was impacted because of some other cases going on against him. Similarly, this Ramchandra Dalaram Chaudhary, he was also applicant as an RP because he was the RP in the case of Rainbow. And then the State Bank of India, the State Bank was not a party to the original proceedings in this case because the State Bank thought that it has to be fought. So the State Bank also was basically party to the, similarly, the Chandra Prakash Jain is an RP in another case called McAster Engineering, where the similar law was applied. Indian Overseas Bank, that is also, so these are the 5 batch of petitions, and the common judgment against which the review petitions were filed, that particular judgment was dated 6th of September 2022, which is very commonly known as Rainbow Paper Limited versus State Tax Officer. And in that judgment, the NCLT said that Section 48 of the Gujarat Value Added Tax cannot prevail over Section 53 of the IBC. So that was the first adjudication, that the Section 48 of the Gujarat Value Added Tax cannot prevail over Section 53. Then the matter went up to NCLAT, the appellate authority, and the appellate authority also passed an order and saying that the judgment of the NCLT prevailed over, as the NCLT also said that the Section 48 cannot prevail over Section 53. And then the Supreme Court decided this case on 6th of September 2022, and in paragraph 56, one part, paragraph 56, 57, 58, these were the basic held portions. Section 48 of the Gujarat Value Added Tax Act is not contrary to or inconsistent with Section 53 or any provisions of IBC. Even under Section 53, subsection 1, clause B2, the debt owed to a secured creditor, which includes the state under the GVAT Act, to rank equally with other specified debt, including debt on account of workman dues for a period of 24 months preceding the liquidation commencement date. So this was the first paragraph of that judgment. The second paragraph was like, as observed above, the state is a secured creditor under GVAT Act. Section 3, subsection 30 of the IBC defines the secured creditor to mean a creditor in favor of whom security interest is created. But this line that I have highlighted as red, such security interest could be created by operation of law. Although I know the facts of this Rainbow Paper Limited judgment, in that case the facts were that the state tax officer in fact had attached the property of the company, and that attachment was also known to the RP. The demand was raised much before CIRP period. Attachment was done during CIRP. So therefore, the RP did not consider the demand, did not consider the attachment, and the resolution plan was approved. But in this case, the Supreme Court said, once the asset is attached, that is what is covered under the security interest definition as given in section 3, subsection 30. Now, but the only word is such security interest could be created by operation of law. That actually means that even if there is no attachment done by the department, it will be deemed attachment because there is a operation of law. If there is a demand and there is a section which is almost similar to section 48 of GVAT, then in that case, even the attachment is not required. If there is a demand and the provisions of that a law provide for attachment of properties, then the state tax authorities would be considered as secured creditor. The definition of secured creditor in IBC does not exclude any government or government authority. The definition does not exclude. Now, the paragraph 58 also says that we are constrained to hold that the ANCLAT and the adjudicating authority erred in law in rejecting the appeal of the appellant. As observed above, the delay in filing a claim cannot be the sole ground for rejecting the claim, because in any case, we are not talking about the delay in filing the claim, and we are now talking about when the attachment of the properties is done. Number two, when there is a demand and the provisions of that law says that when there is a demand, that the properties of the particular company would be considered as having a lien on the properties. So any lien on the property would also be considered as a security interest. The definition of security interest is very clear. Therefore, in paragraph 59, the appeals are allowed and the orders are set aside. However, the resolution, that is what was allowed in Rainbow Paper judgment. And when it comes to the review petitions, let me focus on one thing, that the review petitions were not dismissed based on any kind of argument that the law is different and the order was different. The Supreme Court has said, first of all, the review powers. What is the review? The review is the plea, it is mentioned in the order when these review petitions were dismissed. On plea of review, unless the first judicial view is manifestly distorted, is like asking for a moon. It is also well settled that a party. It is also well settled that that a party is not entitled to seek a review of a judgment delivered by this court merely for the purpose of a rehearing and a fresh decision of a case. The normal principle is that a judgment pronounced by the court is final, and departure from that principle is justified only when circumstances of a substantial and compelling character make it necessary to do so. Under Order 47, Rule 1 CPC, a judgment may be open to review inter alia if there is a mistake or an error apparent on the face of the record. And then, of course, various judgments were also given, and that was primarily to discuss about what kind of cases are covered under review of a judgment. So then the court said that this is not a judgment which is covered as a kind of review. Then the review petitioner, they in fact cited that case of Paschim Anchal Vidyut Vitran Nigam Limited versus Raman Ispat Private Limited. Raman Ispat is also supported by AAA Insolvency, and that particular judgment was delivered on 17th July 2023, and that was much after the Rainbow paper. So it was in fact in that particular judgment, it was also a two-member bench, and it was what was held in this judgment. In fact, this particular judgment, which is the Rainbow paper, which is which is the other Raman Ispat matter, that was a kind of fresher matter, and it was held in this particular judgment that the Rainbow paper did not notice the waterfall mechanism under Section 53. So this is a different bench. Rainbow paper was given by a different bench. This Raman Ispat is given by a different bench. The provision had not been adverted to or extracted in the judgment. Furthermore, Rainbow paper was in the context of a resolution process and not during the liquidation. Section 53, as held earlier, enacts the waterfall mechanism, providing for the hierarchy or priority of the claims of various classes of creditors. The careful design of Section 53 locates amounts payable to secured creditor and workman at the second place after the cost and expenses of the liquidator payable during the liquidation proceedings. However, the dues payable to government are placed much below those of secured creditor and even unsecured and operational creditor. This design was either not brought to the notice of the court in Rainbow paper or was missed altogether. In any event, the judgment has not taken note of the provisions of IBC which treat the dues payable to a secured creditor at a higher footing. So in this Raman Ispat matter, this was held. So since July 2023, almost everyone, all the stakeholders were really comfortable that this Raman Ispat, the Rainbow paper has been diluted, and the impact of Rainbow paper would not be there in any kind of distribution or in a resolution plan. So then the Supreme Court says in this regard, when the Supreme Court was referred about this kind of order, then the Supreme Court said that any passing reference of an impugned judgment made by the bench of the equal strength could not be a ground for review. It is well settled proposition of law that a coordinate bench cannot comment upon the discretion exercised or judgment rendered by another coordinate bench of the same strength. If a bench does not accept as correct the decision on a question of law of another bench of equal strength, the only proper course to adopt would be to refer the matter to a larger bench for authoritative decision. Otherwise, the law would be thrown into the state of uncertainty by reason of conflicting decisions. Review petitioner's submission that the court in the impugned decision had failed to consider waterfall mechanism as contained in Section 53 and failed to consider other provisions of IBC are factually incorrect. As evident from the bare reading of the impugned judgment, the court had considered not only the waterfall mechanism under Section 53 of the IBC, but also the other provisions of the IBC for deciding the priority of for the purpose of distributing the proceeds. Finally, the paragraph number 56, 57, 58, and 59, as I read, was upheld. Now, let us understand what would be the impact of this judgment on the overall IBC. As I said, that the Rainbow paper judgment has given tax authorities a greater certainty and security in the IBC processes. Now, the tax claims will come as a secured creditor, and that means that the tax authorities will get pari passu along with the workmen and secured financial creditors. Now, this judgment, Rainbow judgment, after this dismissal of the review petitions, now the IBC has become more complex. Because under the SARFAESI Act, when a secured asset is sold, the proceeds are not shared with the tax dues. So therefore, the insolvency will become little inferior as against the SARFAESI, where the sale of assets is possible. The stakeholders now, the committee of creditors will have to renegotiate all the resolution plans, whatever they have already approved. The adjudicating authority would also not approve a resolution plan, even if it is approved by the committee of creditors, because the adjudicating authority will say that you bring a resolution plan which is also compliant to rainbow paper. So therefore, most of the resolution plans will come back. Now, in the liquidation, the liquidator will also consider the claim of tax authorities. Now, see what exactly the RPs and the liquidators are supposed to do now. First of all, as far as the resolution plans which are pending before adjudicating authority definitely will insist that you please give us a certificate that this resolution plan is compliant to rainbow paper. So in case those resolution plans are not compliant, another COC meeting will have to be held by the RP so that the redistribution is done considering the tax authorities as a secured creditor. One thing is very clear, that the GST is not a secured creditor, because it is very clearly said in the GST law that the GST would not be recoverable in case there is a insolvency going on. Also, we have to see whether there is a similar provisions similar to Section 48 of the Gujarat Value Added Tax, if those kind of provisions are available in other statutory dues. Now, in Section 48 of the Gujarat Value Added Tax, in case of tax dues, there would be lien on the properties of the SSC. So that kind of similar provisions should be there in the income tax law or in the any service tax law or any kind of other laws. If those provisions are not there, like I know that in GST there is no such provision. So any GST outstanding would not be covered under secured creditor. However, the income tax department keeps claiming that based on this rule, income tax department also have a lien on the assets of the company. Therefore, they are claiming that they would become secured creditor, not financial creditor, but secured creditor. So this kind of judgment will have impact on the local bodies tax, property tax, house tax, dues of other government agencies. That also would adversely impact. So what I'm trying to now say, that when this rainbow paper at kind of a judgment now, there are two possibilities now. One, as the lenders have said that they will actually file a review application before a larger bench. That is the first immediate possibility. Second is that in case the intent of the government is to keep it as it already there in Section 53, then they might have to bring a kind of clarification in the proposed amendment, which might even get amended anytime in the IBC. So this is what is the what I expect, that in future. One thing is very sure, that the review petition will be filed before a larger bench. So now we can take up some questions, Ankit.
Yeah, so this uncertainty that there are two judgments from the Supreme Court itself who talk about, who give an order in different directions, that's something that shouldn't stick for long. Normally we find that in such a circumstance, it is suo motu also sometimes by the Honorable Supreme Court, asked to be adjudicated by a larger bench. But then I believe it will take some time. So in the meantime, if we go back to the discussion paper that came in a while back, which also dealt with the rainbow paper judgment, I remember that there they had proposed to change the Section 53 waterfall mechanism and merge the government entities with the operational creditors. And that showed the intention of what maybe the IBBI is looking forward to do.
I think you're referring to 18th January.
I'm not sure of the date, but that must be it.
Yeah, 18th January proposed IBC changes, yes.
So there the IBC changes had already dealt with this judgment, but then I believe They are, I believe the IBBI is working on a thorough change in the draft, because one of the ideas is to make changes once and for all, whatever changes are required, rather than making repeated amendments in the act in the parliament, because that also becomes, a negative news for the government, that an act is required to be changed so many times. So that, I believe, is going on. So basically, one of the questions is, what happens to landowning agencies like Noida Authority after this judgment? Do they get any further rights based on this judgment, or can there be a litigation which can they use this towards their benefit in any home buyer case?
So what I would say in this regard, that the tax authorities are different, and the Noida Authority or the Greater Noida Authority are different. Now, that's a separate discussion, because see, the tax authorities or the government authorities are totally different. Noida Authority may have a kind of internal rules or internal a kind of agreement that in case of these non-compliances, they would be terminating the lease agreement. So in case we don't want to get the termination, so we'll have to pay them. That is what is the present law. But that present law is not working because it is not really possible for any land development agency or any owner of the land that his total share in the property is totally diluted and the priority is given to home buyers and the secured creditors. So therefore, this judgment is totally different judgment, and the what dues of Noida Authority or Greater Noida Authority, they are not tax dues. So they have another way of recovery, and in case their law also has a similar section as Section 48 of the Gujarat value-added tax, then they also can actually become secured creditor by implication of law.
Then so does this judgment affect already decided cases?
Not really, but then like anywhere the resolution plan which is pending before NCLT, that NCLT will say, okay, make the resolution plan compliant to the present law. Similarly, where the liquidation processes are going on and the distribution has already been done, only the adjudicating authority will decide whether the liquidator is supposed to take money back from the lenders and then give it to the government. That, of course, I don't think that judgment will actually be implemented from back date. Retrospective implementation of this judgment is not possible. It will be only prospective.
All right. So next, so whenever in any court judgment, let's say somebody talks about Raman Ispat and quotes that judgment, then the other person talks about rainbow paper judgment. So when we see both these judgments coming to the attention of the Honorable NCLT, Honorable NCLAT, what in your opinion would be, the net conclusion of those cases? Like, can there still be a chance that Raman Ispat can be followed by the NCLT or NCLAT?
No, I don't think the Raman Ispat can now be followed. Because this review petition is again reiterating this is what we delivered.
But the review petition simply cancels the review, and it is from the same strength Supreme Court bench. So if somebody can say that my facts are closer to the facts which are in the Raman Ispat judgment, and rainbow paper facts are not captured or not part of my facts, can there still be a chance that somebody can get through with the Raman Ispat judgment?
I think some possibility is there, because why I'm saying so? Because in this review petition, merits have not been discussed. However, in the case of Raman Ispat, merits have been discussed.
It's a later judgment, and it's a later judgment. So normally a later judgment.
That's a July judgment, and the other is a September 22 judgment.
So later judgments would have more power in any court if we talk about the later judgment.
Yeah. So this later judgment has not been rejected. The later judgment has not been
review judgment has not been rejected.
still the later judgment can prevail.
Yes.
Means
so we can actually work on that, and maybe kind of everyone can spread awareness of the fact that Raman Ispat judgment is there, and therefore bringing that in the record of the NCLT, where the NCLT, let's say, rejects Raman Ispat and approves rainbow paper in some cases, that matter can always be appealed then.
Yes, of course.
So bringing to the court the attention to Raman Ispat might be a very, very important thing to do now.
I think still the Raman Ispat can be applied, because this dismissing the petition doesn't make the judgment as a later judgment, because that has not been discussed.
So Raviji is saying, since the SC judgment is more of a clarificatory, does it not have a retrospective effect? So even if it has a retrospective effect, the idea is that it would not normally, that's the idea, that Raman Ispat is coming to the rescue, and therefore one can still fight back, even in case somebody opens this up. So we were talking about this case of yours where Income Tax Department came after 4 years of passing the resolution plan and asked for their money, saying that yes, rainbow paper gives us this money. So that's always a possibility, that some tax authorities come back and say that okay, we are not getting our dues. So yep, I think I've taken care of all the questions. Yes, I don't think I have missed something.
So I think we can conclude then, Ankit. I think we've taken care of these two. Though the next session that we are coming up would be on 11th of November, and we would be deliberating on the discussion paper on CIR.
Right. Thank you, everyone. Thank you for your time and being part of our learning series. Thank you.
Thank you very much. Thanks a lot.